Well, as we noted, Canadian gold miners are rising today. The news is that China's central bank has added bullion for the first time in several months. For more on his take on gold and the commodity complex more broadly, we're back with Greg Newman, Senior Wealth Advisor and Portfolio Manager at Newman Group, ScotiaMcLeod. What is your take on gold, and do you have gold exposure for your clients?
We do. And listen, gold has, it's dancing near its highs. But the stocks haven't really responded that fully. A lot of them, the smaller caps have, but the bigger caps, I suppose, the Nico has, but Barrick is still quite cheap and has had its own issues. We, as seniors, we like both of those, a Nico and Barrick. Alamos is one in the junior space that we've gotten behind. And listen, when it comes to gold, it's very frustrating because you can choose the commodity right, which is hard enough to do.
Yes.
But then you have jurisdictional problems and you have production issues, and it seems, and then you've got rising cost issues. And it's the same with a lot of commodities, but it seems that it's been harder for gold investors over the last 20 years. So nothing wrong with owning the indices here. There's nothing wrong with if you have U.S. currency, the GDX or the GDXJ for the juniors. In Canadian dollars, the XGD also makes some sense. And, gold has been the sideshow here. The real, popular sibling of gold with the same sort of theme has been Bitcoin, which has been, insane, and particularly since Trump got elected. So that's an exciting commodity to watch.
What are your thoughts on investing in gold, the metal, or gold mining companies, securities?
Well, I think that you can do both, and there's apparently supposed to be, the old wisdom, a lot more leverage with buying the companies because you get more accretion and that sort of thing.
You often hear that those with the highest price of production can move the most when gold rallies because they often move from lower profit to higher profit. Their profits rises by the most when the price of gold rises.
Right, and that's supposed to be the case, but, it hasn't really worked out like that for the last number of years for various different reasons, rising costs, jurisdictional issues. But I am an equities guy, and I do believe that it's okay to own just the metal. I do believe that most companies with a long-term metal price that's going up can deliver better than just the commodity. So, I think a Nico would be my favorite, safer name. Juniors, Alamos, I think looks good here.
The materials sector has done a lot of the lifting on the S&P TSX Composite Index, which is, of course, trading at record highs now. The materials index on the TSX Composite up 31% so far this year. There's a lot of commodities in there. I think the copper miners would be in there as well. What are your thoughts more broadly on commodities and 2025?
Well, great question. Number one, I would say let's divide it. For the uranium part of that, I think it's exciting with Cameco. Breaking it down, I think if you look at the copper names, copper probably isn't going to do quite as well with Trump. Trump is, a little bit less green, a little bit less environmental friendly cars or EV cars. So, copper 428, I think it is right now. It's well supported. It's doing better with China's stimulus, and China is going to continue to try to stimulate. That's probably the only thing that they can do for the next several years to try to move things forward there. And, the fact that we're in a soft landing does help as well. So China is very well supported here, but I don't know if Teck Resources, I wouldn't sell them, but I don't know if they're going to be doing the heavy lifting in your portfolio for 2025.
What do you think about the year that we've had in oil and gas stocks?
So, I think that same thing with Trump. It's drill, baby, drill. So there's these companies are not priced expensive, returning a lot of cash flow, are able to make money at $68 WTI. The Canadian story is interesting with differentials narrowing. Natural gas is interesting with exports finally, getting off in 2026, and that's been in a bear market for a long period of time. But with a lot more supply coming on under Trump, I don't know that they're going to be your shining star of your portfolio. So if you look at the TSX, we talked about metals, we talked about gas, oil and gas. neither of those are that exciting. I think it's the financials that are turning the corner that are more likely to be driving the TSX in 2025.
That's Greg Newman.